Every year I get asked over and over again, hey, I'm thinking about starting a company. How do I do that? And what are the steps I need to take? How much do I pay myself? All the stuff that you can imagine. How do I pay taxes? And every time I get asked this question, I think I really ought to write this down or film a video or something about it. Well, finally my son Jacob, say hi Jacob, asked me the other day, Dad, I need to start an LLC. How do I set up and start a company? And my thought was, this is gonna be the time that I actually write it down and film a video. So this is for you, Jacob. I'm Adam Boatsman, CPA. I'm the managing partner of one of Charlotte, North Carolina's largest public accounting firms. Over the years, I've helped tens of thousands of business owners just like you save money, make money, and stay out of trouble, and most importantly, have fun while they're doing it. The purpose of this video series is to give you proven techniques to take business deductions and get tax deductions for things that you might have not otherwise thought about. So we're going to answer all your questions and most importantly, show you how to do this stuff without having to worry about the IRS showing up at your doorstep. So if you're tired of taking tax advice from some guy sitting in his mommy's basement, you came to the right location. Even more importantly, I'm also a business owner. So every one of the techniques that I'm going to give to you is something that I've done for myself personally. So with that in mind, let's get started. So common question that we always get asked is, how do I start a company? And then all the follow-up questions around that in terms of how do I pay myself? How do I pay estimated taxes? All that kind of stuff. So we're gonna get into that in this video. What I wanted to start off by saying is that the information that I'm about to give to you, I really only recommend if you're going to be the only owner. Some of the stuff is still relevant, even if it's gonna be a multi-owner startup company. And at the same time, I really recommend that you go see an attorney if you're gonna have more than one owner to do all the stuff that I'm gonna talk about, because there's so many little gotchas that can happen when you've got partners that an attorney is gonna help you navigate. So this really is for single owner startups, not multi-owner startups, but at the same time, a lot of the same information is really relevant. So, starting up a company, congratulations. I know that you'll be successful based on my history of working with startup companies. I can say categorically, I've never seen one fail when the owner was willing to work hard, which I know is gonna be you. That's why you're here. So, what do I need to do first? A lot of the information that I'm gonna cover applies to North Carolina, which is the state that I'm currently sitting in, but it's pretty relevant in any other state that's out there. So the first thing you need to do is to pick a name. Key thing about the name is our recommendation is to always start a limited liability company. A lot of legal reasons to do that, but from a tax perspective, it's the formation that's gonna give me the most flexibility, because I can either be taxed as a partnership, I can be taxed as an S corporation, I can be taxed as a C corporation. You know, I really have some options. Whereas if I go with a corporation, I'm pretty stuck being an S corporation or a C corporation. If I'm an LLP, pretty much stuck being a partnership. So we feel like an LLC is always gonna be the best option, preserves flexibility. So right out of the gate, no matter what, the end of your name is going to be LLC. So when you get to the first part of the name, the key is that you just need to pick a name that doesn't sound like anybody else's. That's pretty important. So what you do to go check that is you go to the Secretary of State's website in your home state. We've got a little tutorial here that you can see in the video that kind of shows you how to do that. So you do a name search and you just see if there's anything that looks close to what you're trying to pick as your name first. This is important because if you don't do this, then the Secretary of State is not going to approve your name because it's too similar to somebody else's name. So you want to pick a unique enough name that you know the Secretary of State's going to approve it. So assuming that you got the name right, you always want to start with incorporating in your state first, or organizing in your state first, I guess technically if you're an LLC. In North Carolina, there's an expedited option to do that, which we're going to show you, that I would highly recommend you take, even though it's a little bit more money. You can do this yourself, not go see an attorney, but we always recommend taking the expedited option because you're going to get your articles of organization or articles a lot quicker. And they're also going to do some error checking for you to help prevent any common errors that happen, like you put a comma in the wrong place or some spacing was wrong or you checked a box incorrectly. So the first thing you do, get set up with the state that you're going to domicile in. A lot of people ask questions around, hey, should I be in Delaware? Should I be in Nevada? Blah, blah, blah. You know, maybe, but I've found that there's never been a problem that people just incorporate in the state that they're actually doing business in as just kind of the easiest, lowest maintenance option. So now that I got that, I'm now legal. If you do the expedited option, a lot of times you're gonna get your articles back the same day, if not within a couple days. So now that the state has approved you, you're official. but you still need to get an employer identification number with the IRS. To do that is real simple. It's pretty instantaneous. You go out to the IRS's website, quick little Google search will show you how to set up an EIN or apply for an EIN online. You use the same name that you use with the Secretary of State to do your name. A couple key things when you're filling out this request though with the IRS. A, it's gonna ask you some questions around when are you first gonna have employees? We all dream big, and of course we're gonna have a lot of employees. I would recommend pushing that out for years as an option because you don't really know when you're gonna hire your first employee, but what'll happen is if you say, I'm gonna have employees immediately, that's gonna trigger the IRS to say, where are my payroll tax returns? And if you end up not having employees for a year, 2 years, or whatever, you're gonna be getting a whole bunch of notices from the IRS that you just didn't need in your life. So recommendation would be, hey, no employees for the time being. It's just gonna simplify your life. From there, the rest of the questions are relatively straightforward. At the end, bada boom, bada bing, you're gonna have an employer identification number. That's gonna be your tax ID number that you're gonna use for everything else that you do now that you're a business instead of your personal social security number. So now I have two primary documents that are really important. I've got my articles of organization or corporation with my state, in my case, North Carolina. The second thing that I have is I have my EIN number from the IRS. I'm now official. What do I need to do now? I need to start a bank account. So I go in, whatever bank is easiest for you. We always recommend a smaller local bank where you can actually get to know the people. The big banks, not a problem there either. Sometimes it's a lot easier to get something set up online with them. But you go in and you start a bank account. They're gonna ask for these documents. Articles of organization, so you're legal with the state, your EIN, that allows you to establish the bank account. So once you got the bank account, you're super official. So now that you're a real company, what's gonna happen is that if you've already collected some money, like you kind of were doing business before you really had a business, you're gonna wanna let all those people know that, hey, stop sending money to me personally, start sending it to my company. It's not the end of the world if there's a couple mistakes and slip-ups. A good accountant can always fix that later on down the road and report it correctly from a tax perspective, but you wanna start doing stuff within your company for lots of reasons, but primarily it's just gonna make your life simpler from a record-keeping perspective. It's gonna help you out if the IRS ever says, hey, let me see what you brought in and let me see what came out. So now that you've done that, you got the bank account, you're official, money's coming in. The next question that's gonna be asked is, well, how do I pay myself and how do I pay taxes? Great question. So let's start with the how do you pay yourself? It's real easy, write yourself a check. So real simple example, money comes in, let's say I earn $1,000 and I need 700 of that to pay my mortgage. I would have the money come into my company account and then I would write a check out for $700 to myself, deposit in my personal account, and then pay my mortgage. That keeps it really clean. What do you really have there? You've got $1,000 in taxable income, assuming that you've got no expenses to apply against it, and you're just putting $700 in your pocket. No taxes due at that point. It's a common question, I take it for granted, but a lot of people are like, I'm used to having a W-2 where they're gonna have withholdings on my paycheck. There's no withholdings in this scenario. So what you need to be prepared for is that at some point, the government's gonna want some tax money. But let's say in month 2, same scenario, $1,000 comes in, I need $700 out, but I've got $150 in expenses that I had that I can now deduct. My taxable income is really $1,000 minus the $150, regardless of what I put in my account with that $700. So when are the taxes due? Taxes are technically due the first year that you file a tax return. So if I start in January of a year, my taxes on all the money that I earn isn't really gonna be due until April of the next year, April 15th, tax day, which if I file my return on time, I pay it then. If I extend it, I still gotta pay the taxes that I think are gonna be due. We always recommend that people kind of hang on to their tax money in that first year because you don't really know how you're gonna do. You might buy a car, get a big deduction for it. You may have to buy a bunch of equipment, get a big deduction for it. Since you don't really know how you're gonna do, it doesn't make sense to go ahead and pay in taxes until you kind of know the final result. From there though, after you get that first year of operation under your belt, then that's really gonna establish what kind of taxes do we need to make going forward. which will be, when you hear about quarterly estimated tax payments, that's really you just saying, hey government, here's what I think I'm gonna earn. Let me give you some money each quarter so that we're all square instead of withholding it from a paycheck. And then at some point, if you're gonna be taxed as an S corporation or a C corporation, you're gonna wanna put yourself on a payroll. We'll have a whole nother video series on what's a reasonable wage to pay yourself, because there's lots of different options that are available there, not gonna be the subject of this video. But the point is, in that first year, it's not that important to do it right out of the gate. What we recommend right out of the gate is you just keep on paying yourself enough that you can cover your base living expenses. And then if you see the cash building up in the bank account, great job. You're making money, you can distribute that out to yourself, and then ultimately you're gonna have to pay some taxes on it. If the money keeps on going down, you need to sell more to bring more money in. Those are the basic mechanics of how things work when you're doing a startup company. Again, get set up with the state that you're gonna incorporate in, get an EIN with the IRS, open up a bank account, start depositing money, start paying your expenses out of it, and you needing to get paid is just another expense where you're gonna write a check and put it in your personal bank account. The other thing we recommend too, right out of the gate, is that you get a company credit card, like pay for a lot of stuff with that company card. It can still be a personal card, but it's just something that you use for business. Keeps your record keeping a lot simpler. If the IRS ever audits you, it's gonna be a lot easier just to justify, yep, everything that was business was on that card versus, well, wait, this Lowe's receipt was actually for the business, but this Lowe's receipt was for me personally. Just, keep everything separated and clean. It's just gonna make your life a lot simpler. When you need to go pay the credit card, again, you just use the company money to pay the credit card directly, even though it's in your personal name. We hope this answers all your questions that you've got as a startup. And I guess the proof will be in the pudding is if Jacob can edit this video and otherwise get the LLC started himself without asking me too many questions. If I did that, I know my job, because I sure don't want to have to shoot this again. Good luck to you guys. If you like this video, make sure you hit the like button and that you hit subscribe. If you've got further questions, go ahead and post them in the comments below and we'll do our best to get back to them. If you're looking for more information, make sure you check out our website, subscribe to our blog, subscribe to our newsletter, which are also included in the links below. We hope this was really helpful to you, and have a good time.